All right, guys, looks like we are live. Welcome back to RoxomTV and also welcome back to GemGem Crypto. Well, if you guys have been watching my updates, you know I went to Abu Dhabi, so that's why I disappear on YouTube for 2 weeks. And finally, I'm here again doing my usual analysis. But I have to say, Abu Dhabi, I really did find it very impressive. So here are some of the pictures that I took. There was I spent like 2 weeks in Middle East. It was my first time in Middle East, and I have to say, like, it really was nice. And during that week, there was a lot going on. There was Bitcoin Mina, like obviously I took this picture at the Roxom TV booth in that Bitcoin event. If anyone went to Abu Dhabi, please let me know in the live chat. So here I did a bunch of interviews with different co-founders, like different talents. So this one I did it with power mining farm. I also did a bunch other stuff, a bunch other interviews. So I went to the talk, like we have the founder of Roxom TV hosting a panel. So he was the host. And we also, of course, we have CC and Michael Saylor. I went there, watched the entire thing, like entire talk of CC and Michael Saylor. I enjoy CC the most because like I really like how the host asked questions, and it was like very interesting. The host asked CC about the prison life, how he see Bitcoin is going, and CC's take on the whole general market, especially with Donald Trump in place right now. So it was a really interesting talk. I enjoyed my time in Abu Dhabi a lot. I met so many amazing people. So I would say the general crowd of Abu Dhabi, they are very innovative. They are constantly looking for other opportunities, whether it's in AI or blockchain. So overall, it was such a great vibe. And yeah, I mean, I met people from like doing different stuff, whether it's family office or VC or traders. Like I love how they like creativity and new stuff. So, like, if you guys have a chance going to Abu Dhabi, or maybe you guys gone to Abu Dhabi before, like, I'm sure the impression you found is basically is really good. And I've heard stories that it's basically better than Dubai. From a finance and business perspective, because Dubai, it was like very party vibe from what I heard, but like Abu Dhabi is the actual business, it's the state money. The actual actions being happen is actually in the city of Abu Dhabi instead of Dubai. So that's what I've heard. And Abu Dhabi did not disappoint me at all. And I managed to have a nice little break, had a little vacation. So I enjoyed that very much. But anyways, that's the updates I have. Like if you want to know my personal whereabout or my personal updates, make sure to give me a follow on my personal Twitter, on my own Twitter. So GemGem_Crypto_IO, and also on Instagram as well. So if you guys want to check that out. Anyways, since we haven't done a Bitcoin analysis for 2 weeks, almost 2 weeks, let's start with a Bitcoin chart, of course. Now, Bitcoin, like I have to say, I'm quite proud of my own TA, my own analysis, because okay, I haven't been staring at the chart actively all the time for the past 2 weeks. But if you actually go back to any of my shows in November, or even like early December before I took that little holiday to Abu Dhabi, or like work holiday in Abu Dhabi, you notice that I managed to call the bear market really early, and I'm one of the earliest hosts and analysts out there to say that. It is a bold statement, especially back in October, where we have seen like people. There's still some hope in the market. But looks like TA has never failed us, has never failed me at the very least, and my own calculation, my own math is working very much in my favor. Because like what I've done in the, especially in the past month or like a little bit over a month, is that I shorted some of the altcoins, especially altcoins, because what I'm seeing is that Bitcoin is on a downtrend. And based on historical data, based on the 4-year cycle, I know 4-year cycle is very controversial, but looks like it is so intact. And we have seen this cycle top, or maybe not cycle top because people will find that offensive, but like all-time high, exactly on 6th of October. So we reached 126K, and ever since it was a downtrend only. And what I've done, even like 2 weeks ago, I talk about a relief rally 2 weeks ago, and looks like it has been playing out rather well. So again, math never failed us. And one thing why I find TA so impressive, because I believe narratives follow price. Like for some reason, math will give us a signal first, like whether the market is heading to a bearish trend or bullish trend, because price always move fast, and then people like to allocate some BS narratives, okay, to justify why we are moving or this sort of movement. So anyways, like this week, what's the new stuff we're talking about is Japan. So we right now we have a bearish narrative to allocate to this movement, being Japan very likely they're gonna raise 25 basis point on Friday, so on 19th of December, which means in 2 days. So of course, this again is a bearish signal, is a bearish narrative people like to allocate. But like, okay, if you ask me, like even 2 weeks ago when I was doing my live shows, I did not know exactly what's going to happen. But like for some reason, math would tell us that, okay, there's some bearishness, and then looks like people like to allocate this Japan rate narrative to the price movement. So what I'm saying is that I'm very mentally prepared for the most likely outcome, being that we will head to a lower place. The reason why I will say this is, let's look at the daily right now. So daily, of course, we haven't even touched the general downtrend. So we have been building up this rejection line. So this general downtrend since 126K. And even that was back in like 9th of December. So when I was in Abu Dhabi and not doing a live stream, we tried to get close, but we didn't even touch the general trend line. So we didn't even have a chance to get rejected. And then boom, we went to a support region. So what I'm saying is that for the bulls out there, like somehow there's still many YouTubers, there's still many content creators saying that this is just a little bomb, and in 2026, so basically after December, it's going to be the best time still ahead of us. But that is really not what I'm seeing from the data, from the chart. Okay, I know there are some very bullish macro tailwinds, but until it's being justified, until I've actually seen it on the chart in front of me, I'm sticking with TA, because for the track record, it's working really well, and my short with altcoins has been printing for me so far. So I'm sticking with what's actually work instead of some BS narratives that people feel or people want this would work. So anyways, this is one thing that I noticed, like we haven't even closed about, like we didn't even touch the general trend line. This again, number one, bearishness. Second one is that we've been building up this like support, rising support ever since 21st of November. And this rising support broke on 14th of December. This is another, so the second bearishness that I'm seeing. Like number one is the general downtrend. We didn't even touch that. Number two is that we broke below the rising support, which is again more weakness I am seeing from the chart. And number three, most importantly, like how do I justify, okay, whether this is a bear market or not, Jemmy? Okay, one level I'm watching very closely, if we zoom all the way out, is actually 108K. The reason why 108K is so important to watch, because it was the previous cycle top. So, previous all-time high that happened in December last year, and other all-time high being made in January 2025. And then here, it just like keep getting rejected. It's like the all-time high that we had, and we were staying below for a few months actually. So until we actually broke above 108K. So technically speaking, any price action below 108K, that is the definition of a bear market. So I do not understand why there's so many analysts out there still think this is not a bear market when we have all the fact, all the data in front of our very eyes. But like, anyways, speaking of those like altcoins, Pummer, personally, I have no respect for those analysts at all. But let's come back to Bitcoin. Anything below 108K, that is the definition of bear market. So this is the number 3 reason why I think this bearishness is going to continue. So this is the daily thing I'm seeing on the Bitcoin chart. And as for December, since that we're halfway through, today I'm doing this live stream on 17th of December. So we still have like 2 weeks to come, to see whether Bitcoin managed to close with a positive number, because at the moment it's still a negative 4% in December. And last time it happened like with a 3 consecutive months of negative number, negative return for Bitcoin, especially in October, November, and December. That was back in 2018. Well, let's see if we manage to close the gap, maybe close with a more consolidation number, a flat number, because like November, it was quite painful, like we dropped 17%. So yeah, let's see if we manage to close flat. The reason why I will suggest this outcome is because if we actually hop onto the weekly now, like, okay, let me go ahead and remove the drawing, actually. If we go ahead and look at the weekly right now, so, wait, actually, let me remove that drawing, and the weekly will be clear now. Okay, the reason why I want to I'm suggesting maybe there's a little consolidation period, especially after seeing November a negative number of 17%. Let's hop on to the Ichimoku cloud. So Ichimoku cloud is being this like gap that we're seeing here. It is a leading indicator, and so far it has been so accurate to kind of tell you where the trend is heading to. At the moment, we are tracing inside this Ichimoku cloud. So inside this span, so we have the span A and span B. Span A being the resistance level we are watching, span B being the support level that we're watching. So most likely we'll be trading inside this region. The reason why I would say this is, okay, if we zoom out, that's what happened in the previous bear market. So that was back in 2022. So we broke, of course, like there are 2 indicators we're watching, as I mentioned. The first one to see whether this is a bear market indeed is the 50-week moving average. So 50-week being the blue line over here. So if we have 2 weekly candles below the 50-week, that is the definition of a bear market. So I don't know what these analysts are on about. At least from a technical standpoint, it has saved me a lot of money, and also it has been printing on my shorts. Like, of course, when it comes to shorting, I'm using for hedging only, so it's for risk management. So please stay away with any leverage, because we keep seeing people get wrecked with leverage. And right now, since there's so much manipulation going on from market makers, do not use leverage, even like if you're bearish overall. I'm not putting a short on Bitcoin, but like I'm ultra bearish on all the altcoins. So that's why the strategy has been working in my favor. That's why math has been working in my favor, and I trust my own TA. So anyways, first thing one confirmation we have is the 50-week moving average. And so far, we've been trading well below the 50-week moving average. That's confirmation number one. Confirmation number two is the Ichimoku cloud. So Ichimoku cloud, if we like drop and actually trade inside this region, that is confirmation number two, because that's what happened back in December, late December 2021. So being the end of the bull market or entering bear market, whatever I want to say it. So here we have the confirmation number two, and this time, because based on the previous cycle, we spent like 3 months inside this region. So between span A and span 2, that is, of course, the consolidation period. Like if we applied the same pattern, same math, maybe we're looking at like, okay, for 3 months, maybe we are talking about February 2026. So in other words, we'll be trading between so let's see what this week printing is going to be, but it's somewhere around like 80k to like 100k. So maybe we have some consolidation, and when people see the number of like even like 98k, people will get really excited. Okay, QT has ended, the Fed is only going to print more money, there's only rate cuts to come, yada yada yada, money tailwinds. When people get excited, that's when the market likes to humble us. So maybe we're gonna get like a deeper correction. But the general rule of thumb is that maybe we're gonna spend some time inside this region. If we lose span B, that means okay, there are definitely deeper correction. We're entering another leg down in the cycle in this market. However, if we go to span A, and then like I'm not seeing any justification that will close above span A. Like, of course, then if that were to happen, maybe I have to recalculate my own math. I have to recalculate my TA. But like so far, I'm not seeing a lot of bullishness from this charts, especially for the weeks I'm seeing here. Like it looks like maybe we're gonna continue the downtrend, but like if we go to span A, and then most likely we'll get rejected and consolidate a little bit. So in other words, if we lose span B, that means a very deep leg down, like we're gonna enter the next phase of a bear market. But if we like go up to span A and get rejected, maybe there's like some consolidation before finding a leg down. So regardless, this is a bearish setup. And number three of the confirmation I'm seeing is actually when it comes to Ichimoku cloud, the red line is overtaking the green line. Again, this is a really bearish signal, because at the moment right here, because last time it happened, that was back in here. So of course, this is a leading indicator. Right now it's showcasing June 2026 next year. And back in the previous bear cycle, it kind of like tell you the maybe the cycle bottom is almost in, but like we went even lower. That was back in November 2022. But regardless, this is another sort of third bearish signal I'm seeing from this like Ichimoku cloud alone. So let's see how it goes. Like maybe we're gonna spend some time trading inside this consolidation period. Like if so, if you guys haven't the risk, maybe like think of some strategy that actually work for you. Like I've always talked about Q4 being the cycle top. Based on the historical data, Bitcoin looks like it's following the 4-year cycle exactly the same, because We know the magical number of 1,064 days. We have talked about that extensively on my channel and also on RoxomTV. So if you guys didn't know, it's a cycle bottom to cycle top. So any previous cycle, it lasts 1,064 days. That's how we got this magical number. And looks like the four-year cycle is still intact, but like people just like to choose to believe the bullishness because like that's where it gets most of the views on YouTube and on social media. But that's okay. I'd just like to tell you the truth. I'm not being a perma bear. Like if we get more data, because like TA, how I say it works is mostly like calculating probability. It's like playing poker. Like when you get new cards, your calculation, your probability, it changes as it goes. So same for TA. It's just like calculating probability, looks at different outcomes and which one looks more probable with the highest probability. And for me, it looks like the highest probability is being a bear market. So anyways, I'm watching this very closely. And of course, we have some macro headwinds. Again, like, I don't know, like 2 weeks ago, actually more than 2 weeks ago, more than a month ago, I've been talking about a bear market, and looks like the narratives right now is Japan. So for those of you who don't know, Japan for almost 30 years has actually been through deflation. So that means prices kept falling, people delayed spending, and companies stopped investing. The reason why deflation is so bad, and economists just like, it's the nightmare of economists. No one wants to see deflation. Because think of it this way. If I have $1 in a bank account, and today $1 could buy me, I don't know, like one toilet roll, for example, okay? For example, today $1 will buy me one toilet roll, and tomorrow, how deflation works is that my $1 today will manage to buy me 2 toilet rolls tomorrow, and maybe on day 3 will manage to buy me 3 toilet rolls. So what I would do as a consumer is that why don't I wait to spend my money tomorrow? Because I know tomorrow my money gonna worth more. So this is economists' nightmare because people don't want to spend. That's why it's actually really bad for the general economy and general GDP of the country. So this is what Japan has been experiencing for decades. This started after Japan's giant asset bubble collapse in the early 1990s. So as you can see, Japan enter the deflation trend right now. So that was, look at the yellow line on this chart. So for years, the Bank of Japan, they tried everything. They tried to lower interest rate. They went a negative rate. So it was below zero. Negative rates for years, massive QE, they printed so much money, but inflation somehow still stayed below 0% or maybe a little over 0%. Then it comes the 2022. So 2022, it changed the entire game. So focus on this like tick, the yellow line, this uptick in 2022. That's the inflation. So what happened back here? So since 2022 is that there is global energy shocks, there's supply chain issues. Of course, it pushed inflation up. Japan hit like a 2 to 4% inflation, which is high for a country used to have stable prices for years, for like 3 decades. Wages also began to rise because Japan has a shrinking workforce. Like Japan has one of the most oldest population among the whole world. So that means the workforce is a lot smaller compared to years ago. Bottom line, Japan finally escaped deflation. Again, deflation is the economist's nightmare. However, inflation still feels painful to consumers. So Bank of Japan must be very careful not to over tighten stuff. And why this matter so much? Like, because Japan is in a major dilemma right now. Japan is raising interest rate right now. Is sitting at 0.5%. This happened that was like a drastic change, like from a negative rate to a 0.1% rate. That was back in April last year. When that happened, of course, there's like a massive carry trade risk. People were panicking. Of course, risk on asset like Bitcoin went down. But looks like the dust has settled. But like the news of the carry trade risk is just like recycling. And right now, if we hop onto Poly Market, there are, let's see, so there are 98% of people predict that on 19th of December, being on Friday, Japan gonna raise interest rate for 25 basis points. So that means they'll bring us to 0.75% on 19th of December, which is the highest in 30 years. The reason why Japan wants high rates because a strong yen against the dollar. So a strong yen would actually reduce import costs. If we quickly hop onto the yen versus USD, we are here on the 1 month chart. Of course, like when it comes to FX, foreign exchange rate, 0.02% is not a lot, but like for countries, like an FX like this is actually quite a lot. And so Japanese versus USD is going up a little bit. So this actually is hurting the import stuff, import costs, and of course, in the local Japanese market, there's a rising wages, a signal recovery. However, inflation is very much above target, so like close to 4%. But the US keeps interfering indirectly, or I would say directly, because the US is Japan's #1 export destination. New tariffs would actually threaten Japanese automakers. So if US demand weakens, Japan would slow down, and a strong USD would weaken the yen even further. So the BOJ, Bank of Japan, must watch what the Fed is doing. Like they must watch very closely. They can't raise too aggressively if the US economy is cooling down. So think of it like Japan is trying to accelerate, but the US keeps tapping the brakes. And this is actually not the first time the US wreck the US wreck Japanese economy. So if you guys don't know what I'm talking about, this is referred to the lost decades of stagnation, and this is a very controversial move made by especially the West. So this primarily centers on the Plaza Accord and subsequent Japanese domestic policy choices. So this is the this is the context. So back in 1985, the US, Japan, West Germany, France, and UK signed the Plaza Accord to address the large US trade deficit, which was partly driven by a strong dollar. The argument aimed to depreciate USD against Japanese yen. And of course, the German currency, the yen appreciated significantly as a result, making Japanese exports more expensive and less competitive internationally. So this is how, US has wrecked a lot of other nations, and this is just part of the history. But like, this also showcased why investors around the world is so scared of stuff like this, the carry trade. And this is a core concept we must understand in this live show. So what carry trade means is that investors can borrow really cheap yen, really cheap Japanese yen, and invest in higher yields in US assets. Because Japan, like look at this, we went 0 interest rate, like negative interest rate. Global investors can borrow trillions of yen and move to to money into move the money into US stocks or US bonds or crypto or Bitcoin. So what this does is boosting global liquidity. But if the BOJ hikes rates or the yen strengthens, the borrowing cost would rise as well, and carry trade would unwind. Most likely, like investor need to sell some assets to repay the yen, repay the Japanese yen loans. If they sell, maybe some of them they hold crypto, they hold Bitcoin, and Bitcoin will drop even faster. This happened during the past BOJ moves, like when we have the rate hikes and Bitcoin had like a 25% crash. But why it matters now? So for the December one, so for the Friday rate hike, it could trigger another unwind while global liquidity is quite thin, especially during the holidays. Like, remember, this is December and we're entering Christmas. So usually people are not actively trading on Christmas. They like to spend time with the relatives. So global liquidity is usually thinner during holiday times. So this is the headwinds that I'm seeing, and it also justified the moves that I've talked about. Like, okay, I went on a little break for 2 weeks, but like, I don't know, for some reason, narratives follow price, and the charts always signal us something that we have to be alerted. But it's not like all doom and gloom. We have some good news from the US economy. So here, look at this. US added 64,000 jobs in November, a sign the labor market is slowing. Well, I mean, it could be good news or bad news because you'd be like, okay, Jemmy, like 64,000 jobs, but it's a sign the labor market is slowing. It's so contradicting. What do you mean by that? Okay, bear with me. Bad news is good news. Here's what it means. 64,000 jobs, it was slightly better than expectation, but the thing is, unemployment rate is also rising. So unemployment rate right now is sitting at 4.6%, the highest since 2021. A few key points we have to pay attention to the whole labor market. Like, first of all, we have a revision again, no surprise. In October, there was a revision of 105,000 jobs lost. So we went a negative number. It's actually many months in 2025, we revised this number down. So for this like non-farm payroll, I'm taking with a pinch of salt. Like, it's very easy for the US government to manipulate this number. Like, maybe this month they will give out like even something ridiculous, like 1 million jobs being added, but only next month they will revise it down to maybe a negative 100,000 jobs. So the whole thing is as bizarre and as ridiculous as it could be. But like, speaking of the labor market, the US is slowing down and it hurts Japan's exports. It makes the whole Bank of Japan more cautious. It also increased the risk of carry trade, so carry unwind. But why bad news is good news? Because like, rising unemployment is often bullish. It pushes the Fed closer to rate cuts. Lower rates, of course, it means the borrowing costs get cheaper, easier liquidity to flow into the market. There's maybe higher demand for risk on assets. And as for risk on asset, people still like to classify Bitcoin as risk on asset. So hence, that's why I say bad news is good news. Markets now expect potential like a January 2026 rate cut for the Fed. After seeing a weak labor market like this, unemployment rate is sticking out now at 4.6%. So in other words, Japan, okay, just to sum up, Japan is tightening the liquidity. That's bearish. But on the other hand, so on the other side of the globe, US is easing expectation. So this is bullish signal. Bitcoin sits right between these forces. So there is a lot of uncertainty in the market right now. And of course, when it comes to the carry trade and the whole global market, we need to look at the S&P. And S&P is actually, it's very close to its previous all-time highs. So previous, we reached like 69.23. Right now, we're sitting at a little bit of correction, 6,800. But like compared to Bitcoin, like this correction is really nothing. If we zoom out, it looks like it's still on a major uptrend. So there's some bullish forces for S&P, like a weak U.S. labor market and a rate cut expectation. But bearishness is, of course, the Bank of Japan, the carry trade, U.S. tariffs would maybe slow down global growth. As for Bitcoin, of course, like that's what happened last time when we have this like a massive rate hike from Japan. I mean, it's not that massive, but like that was enough to trigger a at least 20% crash for Bitcoin's market. So maybe this would happen, but some people say that it has been priced in on Friday. But of course, we'll break the news on RoxomTV. I'm watching that very closely as well. So just to sum this up before we go on a little break, Japan finally escaped deflation. So let's go to the chart I was showing. So finally escaped deflation, but rising inflation forces the BOJ to raise cuts, and that could trigger a global carry trade unwind. Meanwhile, the US economy is cooling, pushing the Fed closer to cutting rates, which usually boosts Bitcoin and other stocks and so-called risk-on assets. So in other words, the world is pretty split right now. Japan is tightening, US is easing, and this tug of war is why market feels so unstable and why Bitcoin keeps going up or down. There's like so much uncertainty. But hopefully TA actually help us to shed some light where the market is going to, which direction it could be heading to. And this is why I love math so much. But anyways, I'm watching the 19th of December, what the Japanese are going to do. But okay, moving on, we also gonna look at some AI news, but like before we do that, let's take a little break and I will see you guys in about 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back after a little break. As I mentioned, we're now going to take a look at AI because everyone is saying that we are in an AI bubble. And there's like so many AI stocks sell off. That's why there's like so much panic right now. So let's take a look at this. So over the past week, investors suddenly turned so bearish on all the AI stocks because there are 2 main names that people are attacking. Wouldn't say attack, but like actually it is in the spotlight. And of course, these two companies are Broadcom and also Oracle. So Broadcom dropped over 5% in pre-market, and Oracle plunged after announcing a $300 billion in AI capex plan. And the market is so worried about two basic things, basically. AI companies might be borrowing too much money to fund massive data center expansions. And the second worry that they have is that valuations are looking a little bit too high, and investors want to see real profit first, not just hype. This trigger a broader AI infrastructure sell-off. So whether it's the chip sector or servers or cloud platforms or data center suppliers, they all fell. Investors basically, they're asking this question: are these companies spending themselves into a debt crisis? And a lot of people are drawing ties to the 1990s dot-com bubble. And Oracle is one of the prime example because they announced the $300 billion in AI infrastructure to support its partnership with OpenAI. Like, this is a multi-year OpenAI contract. And people are saying there's like a huge debt concern over reliance on debt markets. And there's also a shrinking cash reserves. This raised a red flag across Wall Street because like Wall Street is right now quite bearish. Like Wall Street is saying, like, are companies taking too much leverage to chase the AI dreams? And that's for Oracle. Let's take a look at Broadcom as well. Broadcom added more fuel to the fire because when analysts question this, there is a falling margin concern. Management indicated that company's gross margin would decline slightly, primarily due to a higher mix of AI revenue, which is currently less lucrative than other business segments. And whether AI demand is slowing, whether hyperscalers are cutting back orders, this is a classic bubble psychology. So first, people fear slowing revenue, then they fear too much debt, then they eventually sell, that's what we have witnessed over the past week. And there's some rising political pressure as well. Like the rising pressure is none other than Elizabeth Warren, because like it just makes sense when it comes from Elizabeth Warren. They launch a probe into Google, into Amazon, Meta, and Microsoft. They want answers on how AI data centers are consuming so much electricity, because we know the electricity is not mainly consumed by local citizens, but rather sorry, I thought there was a fire or something. Like they want answers on how AI data centers are consuming record amounts of electricity and is rising energy bills for consumers. They are striking some shady utility deals, and it could triple the US electricity costs, electricity demand by 2028, like as soon as 2028. Right now, data centers make up like 4.4% of US electricity usage and is climbing fast. This added regulatory fear, which investors, of course, hate. That's why it's being fully reflected on the price as well. And there's some prime example, like state like Michigan is becoming a mini Silicon Valley for data centers. There are more than 60 sites identified. Massive tax breaks, a $1 billion hyperscale center proposed, local communities actually protesting against like those energy usage, land use, and low job creation. The Great Lakes region already has 525 data centers, with like more than 200 are planned. This shows the scale of growth and the scale of potential political pushback. So the prime question we're asking right now, are we in an AI bubble? Why investors are asking this, especially during this time of the year. Like the concern of AI being a bubble has never been higher than before. But I would say there's some valid concerns. There's extremely high valuation, like some of the AI stocks trade maybe 200x its earnings, something ridiculous. And there's a massive spending versus its weak revenue. Data center investments is about like $400 billion per year, while the AI revenue is like maybe 200 billion. So they're not earning enough to justify the spending. The math, it's just like, it doesn't make sense. And the third reason is that the US energy, energy consumption is US energy production is another major concern, because when you look at companies like Microsoft, they have a bunch of NVIDIA chips and NVIDIA GPUs laying around, but it turns idle because they don't have enough power to actually run those GPU. And turns out they just lay that GPUs around and it turns dusty. And this is a core issue the entire US, the entire nation is facing. So the key takeaway, maybe AI is getting a little bit frothy, but not like in a very bubbly region. So let's take a look at some of the AI giants that we have right now. Like, are they looking expensive? Like, one key metric we could look at is, of course, the PE ratio. Let's take a look at NVIDIA first, because NVIDIA is the giant, the biggest one. NVIDIA's PE ratio shows how much investors pay for $1 for its earning, with a recent figure around 43 to 46 and a lower 23 to 27, suggesting high growth expectations, typical for tech stocks. Like, okay, it's quite high, so 43 to 46. If we take a look at Google at the same time, so Google is around 30.3x to 30.5x as of mid-December 2025, with slight variations depending on the source, while its forward PE is lower, around 27x, indicating expectations of future earnings growth. This is higher than its historical averages, suggesting strong investor confidence in continued earnings growth, typical for tech stocks. So overall, AI leaders are expensive, but like they're actually backed by real revenue. For smaller speculative AI companies, of course, it's going to be much riskier. Okay, for the arguments against AI being bubbly, okay, we need to look at both sides of the scenario. I couldn't ignore the fact there's still some bullishness in the segment. AI companies actually is making a lot of money. Like if we look at Google and NVIDIA, they are making tons of money with real earnings. And AI, it is really a transformational infrastructure. So it's like discovering electricity the first time, or discovering mobile phones for the first time. So it's not just like tulips, some flowers, right? And demand is actually outpacing supply. And okay, I know people like to draw tie to the whole dot-com bubble, but like if we look at leaders like this, so from NVIDIA and Google, the leaders, the CEO, has actually been through the dot-com bubble. So I'm sure they have learned their stuff in order to climb up to the position that they are in right now. So hopefully they have some experience from the dot-com crash and not overly ordering some GPUs, overestimating the demand of AI. And again, the valuation is not as high, and they're actually earning a lot of real revenue. And let's not forget, the whole AI sector is supported by the entire US nation. So, bubble or not, I don't know. I'll leave you guys to decide. Just to wrap this up for what we have seen, AI stocks are falling because investor fear companies are taking too much debt, spending too aggressively on data centers, and trading at valuations that may not be sustainable. There's also political pressure, like as I mentioned, Elizabeth Warren. So political pressure, energy constraints, and slowing demand adds to the worry. There's no denial for that. But the counter argument is rather strong as well. So AI has real revenue, has real demand, has real profits. This is not the dot-com era where tech giants are far more disciplined and their long-term trend still points to massive AI adoption. So I would say maybe the truth is somewhere in between. AI is expensive. It is overpriced in some area, in some places, but AI is also real, profitable, and transformative. So when you see arguments like this, so do expect more volatility before a clear direction emerges. So this is AI. That's all I want to talk about. But let's move on to Meta. And Meta actually doing a lot more shady stuff. Well, what happened is that there's investigation and it exposed internal Meta documents. It shows that 10% of Meta's 2024 global revenue, so about like $16 billion, actually came from scam ads, scam advertisement, and banned products. So these ads would promote deepfake scams using celebrity faces. They would use like fake investment schemes, illegal or restricted products, and crypto fraud and impersonations. This wasn't a small oversight. Meta knew this was going to happen, and among all this region, China was the largest source of these fraudulent ads. And how China play in this role is okay. China accounted maybe 25% of Meta's fraudulent ads, and Meta would earn like multi-billion of dollars from Chinese advertisement in 2024 alone. That's more than 10% of Meta's entire global scales. So Meta faced a painful trade-off. Like if they stop the fraud, they will lose billions of dollars. If they continue, like profits keep flowing, of course. Internal auditors even warned of systematic corruption inside the ad system. Meta did take some action. They created a China-focused detection team back in last year. So the violating ads dropped that Meta still tolerated a large chunk of fraud because the revenue mattered too much. And one internal estimate is that there's $7 billion per year earned from scam ads alone. Much of it, or of course, like much of it came from China. And so for some of the officials, Meta former officials, the integrity chief of Meta, they call it very disappointing and predictable. The reason why it's predictable because like Meta expanded Chinese ad partnerships, even though many accounts were tied to fraud. Internal teams warned leadership repeatedly, but like of course, the leadership like up above the pyramid is actually very they want to prioritize revenue over safetiness. And I mean, this isn't the first time that Meta is doing such thing. They have done that quite many times. Like, look at this, like Meta, that like a lot of shadiness that Meta has pulled. For example, they were overcharging advertisers like from 2016 to 2019, Meta overstated video and viewership by up to 80%, leading to lawsuits and a multi-millions dollars of settlement. And they also allowed huge amounts of board and click farm traffic. So in 2018, reports show Meta failed to filter invalid clicks, overstating engagement again and charging brands more. Well, Meta response to this issue was that they claim that they double scam reduction goals, and users reports of scams ads have dropped in 15 months, and the tools and filters have improved. But what actually, what people are saying, or maybe I've experienced on my from my own experience, is that many fraudulent advertisers are only removed after spending a lot of money. Some scammers are allowed to run ads until they hit internal bad behavior thresholds. Enforcement is reactive, but not very preventive. So the real question remains, is Meta actually fighting fraud or simply managing it to preserve revenue? Looks like the latter. And well, let's tie this back to Bitcoin, why Bitcoin investors should care about this Meta, because this is some tech company, right? Meta allowed billions of dollars of scam ads, very much from a lot of them from China, because the revenue was too big to ignore. Despite setting up fraud teams, the internal documents show leadership repeatedly choosing profit over safety. And because many of these ads involve fake crypto investments, fake Bitcoin investment, this would once again damage Bitcoin's reputation and trigger regulatory crackdowns. Meta's tolerance of scams, of scam ads, can create fear, confusion, and short-term volatility across the entire crypto market. So, be prepared if your relatives ask about, is Bitcoin a scam? I mean, we have been through that for years, so it's just one thing we could be noted about. But anyways, moving on, we're gonna also take a look at Elon Musk, some more AI news. But before we do that, let's take a little break, and I'll see you guys in about 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, guys, welcome back. As I promised, we're now going to take a look at Grok, some more AI news, because I use Grok on a day-to-day basis, and I couldn't remember my time before AI, so before 2022. So anyways, there's some breaking news. Elon Musk XAI and El Salvador was the picture. So El Salvador and Elon Musk, they have officially launched the world's first nationwide AI-powered education program. So what happens is that Grok AI will become a personalized tutoring tool in more than 5,000 public schools in El Salvador, reaching more than 1 million students from grade 1 through grade 12. So this was announced on on X. So Elon Musk posted on X as well, and a government statement from President Bukele himself. So that's the account, 7.7 million followers. So how Bukele framed it is that they are turning El Salvador into a global innovation laboratory. How Elon Musk framed it is that nationwide personalized education powered by Grok. This is one of the biggest national AI deployments ever attempted. So, question is, why El Salvador? Well, El Salvador has always been quite innovative, and they have been a testing ground for emerging technologies. Like, remember, El Salvador made Bitcoin as the legal tender back in 2021. Like, for a little bit, Bitcoin is no longer legal tender, but at least they tried. And they have like Google partnership for AI assisted healthcare. Starlink rolled out to connect rural areas, rural communities, and nationwide crypto adoption initiatives. So El Salvador is like a great place to have this innovation going on. And this Grok partnership is another step in the president in Bukele, the tech forward nation strategy. What El Salvador wants to do is to like leapfrog traditional education models by using AI to close the urban and rural learning gap. They want to boost math knowledge. They want to boost language and science skills and modernize public schools at a much lower cost, because using Grok and using AI, like it's actually having a little tutor in your pocket. And that's what I do. Like whenever I have something I want to know about the world, I'll just use Grok or other AI models. And this is very exciting for students as well. Like I mean, I wish I had that at an earlier age, but like it's fine. It is what it is. So this actually would personalize learning for each student. They would also help teachers manage large classrooms, as AI provides instant explanations to the student and practice problems. And it will support underserved rural schools, especially. Teachers, of course, still the core, but like Grok is acting more like a digital co-teacher, not an entire replacement yet. People are supporting, like this could be a blueprint for other countries, similar to earlier AI pilots that is happening in Iceland or Greece or UK. But of course, there's still some concerns and quite controversial what Elon Musk has been doing over the years, and especially for AI and Grok, because like Grok has a history of some controversial outputs because Elon Musk just like value the truth, and yeah, they don't want like any biasy, because ChatGPT it could be quite biased, but like Elon Musk's vision is trying to lower the biasness. So Grok, however, like Grok has generated some really sensitive content. They praised Hitler before, and there was some conspiracy theories, and XAI blamed the buggy updates and apologized publicly, calling the earlier outputs maybe some crazy behavior. But like people are still concerned about the data. So how will student data be stored or processed or protected? And when it comes to the environmental concern, because you know AI, they're very power hungry. They need massive electricity and water for data centers, and it's a valid concern for developing nation with limited resources. So I'm sure they're thinking of actual implementations, but what we know so far at the very moment is that this Grok will customize to El Salvador's national needs and co-develop with the Ministry of Education, some special education version of Grok with much stricter content controls. Teachers would receive training to integrate AI tools, and the nationwide rollout would be planned for 2027 after a 2026 pilot phase. So at the moment, there isn't like public cost figures have been released, like no signs of schools will pay fees. But like, okay, how we frame it is more like a public and private partnership between XAI and the government. But like, why this matters so much? Like, let's not forget, El Salvador is already a Bitcoin pioneer, and Elon Musk's involvement would actually strengthen the country's position as a global tech testbed. If AI and education initiatives attract more investment in digital infrastructure, it could indirectly boost the Bitcoin adoption and blockchain and AI integration in the region, because like AI and crypto and digital assets, it just like works so well together. I'm seeing a lot of synergy. So that's why as a Bitcoin investor, we also need to look like we need to be interested in the area at the very least. Okay, moving on to last piece of news I want to cover is actually like, okay, this is really good news. MetaMask is adding native Bitcoin for its 30 million users. Like, this is one of the biggest wallet upgrades in years. Finally, after waiting around for decade. So they launched a native Bitcoin support after 10 months of deployment, actually ever since February 2025 review. And now they serve more than 30 million active users. And there's like like multi-millions of downloads. This upgrade would truly make MetaMask a multi-chain wallet, alongside its support for Ethereum, Solana, Monad, Say, and a lot more. Why this matters? Because like until now, MetaMask used wrap BTC, WBTC, or bridges to use Bitcoin inside EVM ecosystems. Now they can interact with real native Bitcoin directly. No wrapping, no custodians, no contract risk. And this is a massive shift for both Bitcoin and Web3 infrastructure. What you will see, so there's like some, well, where is it? Okay. This is the UI UX you will see. So how users can do this is that you can buy BTC directly with Apple Pay, with Visa or MasterCard or PayPal or bank transfers. Like, you can send or receive BTC and actually hold your BTC inside MetaMask. So that's why it's so cool. There's like a 6-week wallet, so via a 12 or 24 words recovery seed phrase, but not via private key. So that's the key point we need to bear in mind. Like, using Bitcoin on MetaMask, you can actually explore like Bitcoin layer 2 ecosystems, like maybe Rootstock or liquid network, stuff like that. So for the tech, like how they managed to do this, like based on this article, it explains a little bit about like how they managed to pull this off. So they were using something called Bitcoin Development Kit, or BDK. So right here, so Bitcoin Development Kit, an open source Bitcoin wallet library designed to make Bitcoin app development very easy. This allows MetaMask browser extension and mobile app to generate Bitcoin wallets, to create Bitcoin transactions and communicate with Bitcoin nodes, and display Bitcoin balance and history. And it addresses use like a native SegWit, start with BC1. Taproot support is coming soon. Don't know when exactly, but like it's definitely in the roadmap, it's in the development. Confirmation depend on Bitcoin's network, maybe roughly 10 minutes block time. This is true mainnet Bitcoin, not a sidechain or an EVM wrapped asset. However, there's still key limitations because like this thing is still early, so do expect there will be some hiccups. Not everything is perfect yet, because like only Sedgwick, so BC1 addresses supported at launch. Taproot is coming. Bitcoin transactions will definitely take longer than EVM chains. Private keys, like private key imports, not supported yet, and no Lightning Network support yet. But overall, I would say this is a huge step forward. More upgrades are expected soon. So yeah, I mean, this what I'm seeing is great stuff. MetaMask just made Bitcoin accessible to 30 million active users with just one update. This instantly expands Bitcoin's reach across DeFi and multi-chain apps, reduces reliance on wrapped BTC, and connects the world's largest wallet interface directly to the Bitcoin network. So this is one of the biggest adoption boosts I've seen over the years. So I'm liking what I see. Anyways, we have to wrap right now because we are running out of time and we have other really cool content layout on RoxomTV as well. So anyways, before we wrap this, make sure to follow us on Twitter. My personal Twitter is GemGemCrypto_IO. Make sure to follow RoxomTV as well, because we have regular updates about like global news, about AI, about geopolitics. There's so much valuable content you don't want to miss out. So make sure to give us a follow. Anyways, my show is from Monday to Friday. I'm finally back to doing everyday content after my holiday. So make sure to tune in. My live is Monday to Friday at 3 a.m. Eastern Time to 4:30 a.m. Eastern Time. So if you guys don't manage to watch that live, don't worry. The replay is also available on both channels. So on my own YouTube channel, GemGem Crypto, and also on RoxomTV. Thank you so much guys for watching, and I'll see you guys in the next one tomorrow.